Hello, let's review this trade together. All right, I'm going to start from the daily time frame and show you what I did. Now, this is paper trading, not a live trade. Okay, not a live account. It's just paper trading. And anyways, I just want you to pay attention to these levels. So you can see this is Friday 31st October, and I labeled it there as Friday's high. And then there's an area here on the 1 hour time frame that I tagged buy side liquidity 1 hour, because I was looking to how price would engage that area there. Then you can see this area here is previous, this is past Thursday or previous Thursday, and I use this BRC to indicate a bearish candle close. Okay, so that when I see that BRC on other time frame, I would know that this was from the daily time frame, and then it was a bearish candles, close. And you can see this area here. When I go to the lower time frame, you would see that today's 12 a.m. open, and this area here is Sunday 6 p.m. open, and you can see this is previous Friday close. So this Fibonacci tweak here is indicating, it indicates the dealing range that I was working with. So I'll go to the 1 hour time frame. So you can see on the 1 hour time frame, we have this candle, then this one, and the next one, and I have my fair value gap there. Okay, so one of the things that helped, my narrative, like helped me to trust that price was actually going to draw to today's 12 a.m. open during the 10-15 price action, was because the body of this candle on the 1 hour time frame here is resting at the lower quadrant of this fair value gap. Can you see? This is like a very massive weak rejection. Okay, so you can see that it's rejected so much that you know price returned back to, imagine price going so high all the way almost to engage the Friday high, but then only to reject and go lower this way. So when I saw that, I already knew, okay, this is bearishness coming into the market. Okay, and when you look at this past Thursday's bearish candle close, this area, can you see the immediate rebalance that happened here? You can see this particular candle's weak, and you see this after this next candle, you can see how this particular candle traded into the open. It traded into the open of this candles, of this candle here, and then returned back to its open, and then traded lower. So when I looked at this happening, it was already giving me a sign of, immediate rebalance. So I liked that, and I'm going to show you my dealing range. Let's go to 15-minute time frame. So on the 15-minute time frame, I think my dealing range will be more clear on the 5-minute time frame. But on the 15-minute time frame, so once I saw that price was really coming lower this way, I had to, what I did was, and then I think when I came on, okay, yeah, I was not on my chart by 10 a.m. I came on 10:13, I guess. So you can see that price already traded to the 0.5% level. Okay, that's price already traded to today's 12 a.m. open. Now this 0.5% level now is of the daily range that I'm trading with. I think it will be clear, but this is where I got this fair value gap from the 15-minute time frame. Okay, on the 5 minutes, okay, so now on the 5-minute time frame, I'm going to show you. You see, from this area here 2 a.m. to this area here 5 a.m., can you see the price action? Okay, so you can see that this low here, this short-term low here has been engaged by this bearish candle, and you can see what I have there. Today's London key zone low, and then this area here around 4:30, you can see the London key zone high was created. But price has already engaged it as buy side liquidity. So I was at let me see. Okay, 10th. Yeah, I was watching this candle move up to this area, and this to me is a bearish order block. Okay, this area here is a bearish order block, but I really needed to see price reject it before engaging. I need to see price reject this area before engaging. So you can see that working with my dealing range, which is measured from this low, to this high. Yeah, take note, this is the 5 minute time frame. So working with my dealing range, you can see that I have this area here as 0.25 percent level, 0.25% level, and this is the zero level. Okay, so now we've gotten a rejection, a rejection candle. Okay, and so once I saw this, and I saw that price also rejected, this is 8:30 a.m. open, and this 8:30 a.m. open candle now is serving number one as my what, bearish order block, right? And only for me to have the 10 candle to reject that area there, that price level there. So the rejection happening at this place, coupled with the fact that this was a past Thursday's bearish candle close, and also today's 8:30 a.m. open, and then we have opening price. Okay, I didn't add that, but that's what this candle is. You can see when you look downwards, you see it's 8:30 right there. So once I saw that, and then this next candle here already drew into the 0.5% level where we had the today's 12 a.m. open, right? I just knew that price was definitely going to now draw down into the 6 p.m. open due to experience. And yes, most of the time when the new week, this is the new week opening gap. Most of the time when the new week opening gap was fairly traded into by price, can you see it's fairly okay? Let me take this is from the daily time frame. Let me take this one out. Okay, so now we have that one out of the way. So you look clearly, you can see that this is the new week opening gap. Where did I get the new week opening gap from? Let me just keep this. Maybe I'll probably use it later, but then you can see 6 p.m. open from yesterday, and you can see that gap there. And you see during the London key zone, what happened? Price traded, fairly into the upper quadrant of the new week opening gap. So obviously I wanted to see a draw down at least so the midpoint of the new week opening gap. So yeah, this was 5 minute time frame. This was where I found my entry. So once this particular candle did its thing, yeah, I said, okay, since I did not buy at this order block, I would like to, since this area now is above 0.5% level. When you sell at, above 0.5% level, you're also selling at what? At discounts. But let's say now, imagine I sold here at this order block here. That would have been the 0.25% level of this dealing range that I'm working with, right? So that would have been that would be me selling at premium, not discount, sorry, at big premium. So you sell at premium, then you buy at discount. So that would be me selling at a what? At premium. All right. So I had to wait to be sure. I needed more confirmation. So to me, having my dealing range, I knew, okay, this area here, if I sell anywhere within this fair value gap here that is above the 0.5% level, that would be a very good place to sell. And I was also looking at where I can possibly have my stop loss. Okay, so you can see I use this area here as my stop loss. Can you see this area here that was slightly above? This is like the actual area I want to have my stop loss at, the high of this particular candle. Okay, just slightly above the body of this rejection block. But then to just be on the safe side, I was like, okay, let me move it there. Sorry, let me go back and see exactly. So you see, I had it where at the high, because my hope was that if price should trade into the bodies of this candle, then just take me out already at this point. So you can see that was me risking how many pips? 24.6 pips for 91 pips. Now again, I did not actually trade this live. Okay, I just paper traded it on trading view here. All right, so yeah, where was I now? Okay, so I watched, so I was like, okay, since I've missed, my entry at this place, where is the next best place to make my entry? That would be at this area here. Can you see the open of this particular candle? That would be a very good place to sell at. That would be me still selling at premium. Okay, but not deep premium in this sense. So I brought out the tool to go short, and so I waited. This particular candle, I thought it was going to, like, be a displacement candle, but it did not. So, but I was like, okay, anyways, I would make my entry at the open of the next candle, and then have my stop loss, slightly above the high of this particular candle that would have been a displacement candle if it had closed, lower this area here. But one of the things that made me know that this share was going to go very well was because of this fair value gap, this fair value gap from the 15-minute time frame that is resting above the 0.5% level. I'm emphasizing on this because this is very important. Okay, so normally, if I was like trading, excuse me, if this was like an actual live trade, like maybe I was trading my prop account with this, I'm likely to take profit here at the exactly at the 6 p.m. open, or I will take profit here. Can you see this particular area here before price, you know there was before this shift in market structure, right? That would have been where I would have taken my trade, or immediately 10:30. Immediately it was 10:30, I would have just closed my trade if this was a live. So there are different measures that you could use to close out immediately. Or let's say, for example, you had your stop loss. Although price actually like got to the point where I had my take profit, because it's all I was using the open of this candle here that formed the swing low that took price higher. But then in actual sense, like if this was like a live trade, it would be, you know, having my stop loss. Let's say if price gets to this place, for example, or price is actually like heading towards this area, I'll have my stop loss where at this particular area here. I'll move my stop loss, sorry, I'll move my stop loss to this particular area here. That's this candle's high, okay? Or at the Sunday 6 p.m. open. Anyways, but I was lucky enough, very price, actually got to the place I had my T, my what is it called now? My take profit. But when you're trading with a live account, sometimes this spread may not, get to that point. So that's where the discrepancies is, okay? So yeah, anyways, having said that, let's go back to, okay, I think so, because I depended more. I already cut out my levels from the higher time frame, so I was just watching how price would act, on the 5 minute time frame. And you can see what happened immediately. I got filled immediately after price closed here. The next candle filled me in, and I loved see the way I love the fact that price did not go above this particular candle close, and then it dropped. This was 10:20, 10:25, and then 10:30. Exactly at 10:30, price took me out of the trade. Okay, so if you're trading like time based, if you're trading time based, I believe that 15 minutes is okay for you to be in a trade. Like 15 minutes, 10 minutes, 15 minutes, 10 minutes should be good enough for you to be in a trade, or sometimes even 20 minutes. But then yeah, you can see now there's now a shift in market structure. Anyways, that was it. What am I missing? Let's go to the 1 minute. I think there's another. Yeah, so this was exactly where price took me out, but I stayed back. So I drew out this level here, and was interested. I was interested in seeing how price would react to this level here. So let's say, for example, also again, let's say you have your TP here, for example, or you had it much deeper into the new week opening gap, for example, yeah. And then let's say what happened was that price now started retracing back higher, and then you're still on the trade. You can just move your stop loss to this area here, or to somewhere around the body of the candle, or just to this particular candle's open, so you can still take in profit, so the market doesn't just retrace deeply, like retrace almost back to your entrance. That would be crazy. You imagine retrace back to this area here, and you're like, oh, let me exit because this is a very short, but let me exit. And no, don't want to do that. Just look for the nearest candle that looks like another block. It may not be like an other block per se, like but then you know what I mean, just exit responsible. So let's go to the 15 minutes and see. Okay, so this is in 15-minute time frame. Can you see how the bodies of this candle, this particular candle now has rejected this level? This to me now is an immediate rebalance, and the way this candle is coming, you see, I believe this. Okay, it's already 11, right? 11 a.m. So I should be done. I'm done for. Hey, Chineke. I'm done. 11 a.m. I'm done with trading. Especially with the fact that price has already, traded back into, after forming the, after giving us the 12 a.m. open, right, and giving us the 6 p.m. open, price has already traded into the 12 a.m. open and the 6 p.m. open. So I'm not interested in any other thing that price wants to do again. That would be all. Oh my goodness. Uh-huh. Oh, my network is a bit lagging. Okay. Interesting. See the way price is respecting these levels. And you see the way this week now have rejected this area here. Anyways, that will be all for today. That'll be all for today. Hopefully see you in the next review.